Welcome to the Weekly Option, the podcast for people interested in trading stock options. Each week, we cover trade ideas and opportunities in the stock market right now. Whether you're a beginner, a professional, or just curious about options, this is the show for you. Let's get started. Welcome to the Weekly Option. This is episode 287 on September the 9th, 2023. I'm your host, Eric, and in this week's show, we'll cover the trades from last week on Carvana Company, DraftKings, and Pinterest, and we discuss three new trades on Advisor Shares Trust, Pure U.S. Cannabis ETF, American Airlines, and Intel Corporation. Now, it's always great to hear from listeners. If you have any questions about the trades presented here on the show or even about your own positions, feel free to email me. You can email questions to eric@theweeklyoption.com. That's ERIC@theweeklyoption.com. I've also created a few videos to teach you all the basics of option trading that you'll need to know to be able to follow along with me on this show. You can visit our website and click on the videos tab to watch them, or visit the YouTube channel for the Weekly Option. And for anyone that wants to learn how to trade options, I teach students how to trade options, not just study theory, using a combination of videos and live coaching calls. If you're ready to take your trading to the next level, send me an email to schedule a phone call. Now, the U.S. equity markets finished the week lower. The Dow Jones Industrial Average lost 261 points, closing at 34,576 points this week. The S&P 500 index gave up 58 points, ending the week at 4,457 points. And now it's time for the topic of the week. And the topic of the week is consistency. I don't want to mince words here, so listen up. Consistency is everything. I don't mean that it helps out, and I don't mean that it's kind of important. I mean that consistency truly is everything. I have used the same trading method every day for the last 9 consecutive trading days. I did not scale up. I made one adjustment on one day. I have consistently done the same thing every day and have made money. That leads to confidence. That leads to increased understanding. That leads to everything that I need in order to scale the strategy into other markets and increase my volume. Sometimes people scale up without being consistent first. Sometimes people change the strategy up too often and never have faith in a strategy because they never have used it consistently. I know quite a few of you listen to the show each week. You might paper trade or even use the show to help you understand, the things that you're reading about in books. I challenge you to learn one strategy and execute that same strategy over and over and over. You'll learn more about options by having a small trade on, even if it's only $50 to $100 of risk. Just be consistent. Build the muscle of trading. Does reading books about working out give you the same benefit as going to the gym and working out? Does going to the gym and watching other people work out give you the same benefit as committing to a workout regimen yourself? If you answered no to both of these, what would make you think that trading is any different? You will win in life when you become consistent in doing the things that you hope to become good at. Just do them over and over and over again before you switch it up and see how much further and how much faster you get. Now, that's it for the topic of the week. Several of you have emailed me that you wanted more information about the September surprise I mentioned last month. I'll be emailing you a video this upcoming week that'll give you all the details, and I'm super excited about it. This is all about building a community and an immersive experience to help you learn to trade options or get better even faster. If you'd like more information on the upcoming launch, send me an email for the video and you'll have it by the end of the week. All right, let's get into the review of last week's trades. We're going to start off with the covered call on Carvana Company, symbol C as in Charlie, V as in Victor, N as in November, A as in Alpha. At the time, the stock was trading for $50.85 per share. I looked at buying stock and selling the September 55 call at $1.85, hoping for a return of 11.8% in 2 weeks. Well, shares of Carvana fell $3.87, closing at $46.98 per share. The call option we sold lost $1.48, leaving us with a net loss of $2.39 on the week if we were to close the trade out immediately. Now, my first plan is to roll the strike of the option lower to collect a little bit more price, a little bit more premium before expiration. You could sell the 47 strike option expiring on September 15th at $2.21. That would immediately lower your loss from $2.39 down to 18 cents. However, there's a high likelihood that when the option expires on Friday, the stock is going to be above $47 per share. That would lead to an immediate loss on the entire position. And that's the main reason why it's important to do the math each time. I'd rather sell the $48 or $49 strike. Sure, you'll collect less premium, but at least if the stock closes higher on Friday, you'll lock in a bit of a profit. For instance, if you sold the September 15th expiration $49 strike at $1.42, you would lower your immediate loss to 97 cents. But if stock expires above $49 per share, you'd still capture the $2 stock move, leading to a $1.03 gain on a stock position that moved nearly $4 against you in 1 week. That's not too bad when you look at it that way, right? It's even better if the option does not expire in the money and you're able to sell another option in October to collect even more money selling options against this stock position. So as you make adjustments to any of your positions, just make sure you do the math and that the adjusted position puts you in a better position to lock in a profit. Next up, we have our credit spread from last week. We looked at DraftKings, symbol D as in Delta, K as in Kilo, N as in November, G as in Golf. At the time, the stock was trading for $29.64 per share. I looked at selling the September 29 put spread at 17 cents, which could give us a maximum possible loss of 33 cents. Now, DraftKings finished the week $2.21 per share higher, closing at $31.85 per share on Friday. The out-of-the-money put spread that we sold is now even farther out of the money, which means the spread is working out as planned. At this point, we are 1 week away from expiration and $2.52 away from our break-even point. This trade is working out so far, so definitely no adjustments are needed on this one at all. And our final trade on the week was a debit spread on Pinterest, symbol P as in Papa, I as in India, N as in November, S as in Sierra. At the time, the stock was trading for $27.66 per share. I looked at buying the September 27 half call spread for 33 cents, which could give us a maximum gain of 17 cents, or that's a 51.52% return in 2 weeks. Well, Pinterest stock finished the week 11 cents lower, closing at $27.55 per share on Friday. The in-the-money call spread that we bought is still in the money. We're still 22 cents above our break-even point with just 5 business days until expiration. Even though I'd rather see this stock rallying uncontrollably, at least our spread is still maintaining its full intrinsic value. Keep an eye out on the stock as we approach expiration this upcoming week. No adjustments are needed on this one so far, but it's looking like it's going to be a photo finish right at the end, so keep an eye on the stock and just have a game plan of what you plan to do if we start to approach the break-even price. So that's it for the review of last week's trades. This upcoming Friday is expiration for all September monthly option positions. That's September the 15th. The new trades this week will use the October 20th expiration for monthly options in October. So let's go ahead and get started. We're going to start off with the covered call on Advisor Shares Trust Pure US Cannabis ETF. That's symbol M as in Mike, S as in Sierra, O as in Oscar, S as in Sierra. The stock ended the week at $8.22 per share. I'm looking at buying stock and selling the October 9 call at $1.05, which could give us a return of 22.26% in 6 weeks. Now you enter this trade by buying stock for $8.22 and selling the October 9 call at $1.05. This trade makes the most money if stock prices finish above $9 per share, and the break-even price on this trade is $7.17. In real terms, the stock purchase will require $822 and you'll collect $105 for selling the option. Next up, we have a credit spread on American Airlines, symbol A as in Alpha, A as in Alpha, L as in Lima. The stock ended the week at $13.98 per share. I'm looking at selling the October 14-15 call spread at 38 cents, which could give us a maximum possible loss of 62 cents per spread. Now you enter this trade by selling the October 14 call at 67 cents and concurrently buying the October 15 call at 29 cents. This is a credit spread because we're selling the spread, and this trade makes the most money if stock prices expire below $14 per share. The break-even price is $14.38, and in real terms, you'll collect $38 per spread that you sell and have $62 at risk. And then our final trade on the week is going to be a debit spread on Intel Corporation, symbol I as in India, N as in November, T as in Tango, C as in Charlie. The stock ended the week at $38.01 per share. I'm looking at buying the October 37-38 call spread for 64 cents, which could give us a maximum gain of 36 cents, or that's a 56.25% return in 6 weeks. Now you enter this trade by buying the October 37 call for $2.52 and concurrently selling the October 38 call at $1.88. This is a debit spread because we're buying the spread, and this trade makes the most money if stock prices expire above $38 per share. The break-even price on this trade is $37.64 per share, and in real terms, you'll pay $64 to enter this spread, and your maximum gain is $36 per spread. So that's it for this week's show. Like I said, for those of you who are interested in hearing more about the September surprise that I mentioned last month, definitely send me an email. If you already requested it, don't worry, you're going to have it by this time next week. I'll be sending out a video to explain everything, show you everything that's going to be included in the new community that we're building up. It's going to be awesome. I've seen this work for years. In fact, part of the reason I looked at this is I just realized one big key to me learning to trade options was that I immersed myself in it. I was surrounded by traders. I worked on a trading floor all day long. I read books. I took tests. I had quizzes. Everything in my world was designed to make me a trader. And 20 years later, it's still in me. I still remember it all. I still use all of this on a daily basis to make money. And so I want to create a similar experience for you guys. So shoot me an email and I'll give you more details. Of course, you can email ERIC. That's Eric at theweeklyoption.com. Hope you guys have a fantastic weekend. Hope you had a great Labor Day as well. And as always, happy trading. Thank you for listening to the Weekly Option Podcast. Please subscribe to our show and visit us at www.theweeklyoption.com. Disclaimer, there is a very high degree of risk involved in trading. The indicators and strategies described in this podcast are for educational purposes only and should not be construed as investment advice. For our full disclaimer, visit our website at www.theweeklyoption.com.